in the system. We have had the formation of doji candlesticks back to back on Monday as well as Tuesday, and the advanced decline ratio is also favoring the bears. But so far the dips are getting bought into, but the base overall is shifting lower. And what's happening in Indian markets is also reflected in the global peers. There is a big crash in the US yesterday. Amit, tell us more.
Nasdaq 100 saw its biggest crash in weeks. Apple dropped by as much as 2.84%. Tesla dropped. Traders are awaiting the testimony from Federal Reserve Chief Jerome Powell. So that is one thing that is in the offing. Dow Jones closed in the negative at 1.04%, S&P 500 1.02% in the red, Nasdaq as much as 1.65% in the red. Even Disney was in the red after being in the green for days on end. Coming to the European markets, despite Boeing being up, Stock 600 closed at minus 0.23%. Asian markets were upbeat though. Hang Seng is in the positive at 2.17% following the Chinese government's target, setting up the target for 5% growth in the coming year. This was driven by Alibaba.com, Tencent.com and JD.com, whose results surpassed estimates of the markets. So much for the global markets. But for one green in Hang Seng, even Nikkei is in the red. It's red everywhere.
All right, and the sharp correction in the US, that is of course on the back of a slowdown in the services sector. That happened for the month of February. The ISM services PMI fell to 52.6, which is slightly lower than what the street was expecting. And as we know, services, inflation and services inflation is rather sticky. So, the market is clearly concerned over there. And I mean, the kind of, the sharp rally that we have seen in the US, finally, there is some semblance of correction in the market, but although they have been just correcting for the last couple of days. But, coming back to our markets, we have recovered what was lost in the morning trade. Nifty, as we speak, is trading marginally down. As of 9:30 a.m., it was down about 0.2%. Currently, it is trading on a flattish note. The mid cap and the small cap space, however, they are still reeling under pressure. Both indices are down. The mid-cap index has extended losses since 9:30 a.m. It's currently down about 0.75%. The small-cap index, that saw a 1% plus correction yesterday, and today as well, it has fallen over 1%. So clearly, there are some signs of caution that are beginning to pick up in the broader markets. But to make sense of it and get some further clarity as to what the support levels will be going forward, let's also bring on board Mr. Akshay Bhagwat of JM Financial. Thank you for joining us here on News9, Akshay. Nifty has been trading in this tight range this week, 80 points or thereabouts on Monday, 150 points on Tuesday. And, we have seen, of course, the formation of doji, which indicates indecisiveness in the market. But overall, in my mind at least, it seems that, bears currently, they are on a better footing. The overall breadth is favoring them, and the base has, shifted lower over the last couple of sessions. What's your sense of things over here, sir?
Good morning, Suyash. Yes, I agree that the Nifty has been oscillating around the 22,350 mark. Though the trend is positive, the momentum has been off in the last couple of trading sessions. So this is a holiday shortened week, and there is a good chance that there can be some cap on the upside temporarily. There is some global weakness which also adds to this. An important support which we are dealing with is 22,200. That's a very important support if you are looking from a short-term perspective. For day trading, it is 22,275. In short, if it dips below 22,300 during the day, you can expect some form of weakness. To challenge the trend, Nifty has to get below 22,200. In case it does, then there is a slight question mark as to whether the momentum is off or it will be in a range. But as it stands right now, it is holding on to the support. There is lack of momentum, so I expect the indices to trade in a range. The lower end of the band being 22,200 and upper end of the band, if you are a day trader, somewhere around 22,375.
All right, and I also wanted to talk about Nifty Bank, because in my mind that holds a key here for the upside. The index finally managed to break past 47,500. In fact, that was the first close for Nifty Bank above 47,500 since mid-January. And time and again we had seen corrections from there on. 47,500, last time we were here, we fell about 1,600 points. But finally, we have closed above it. In fact, we are trading above it this morning despite the slight correction in the market. What's your take over here on Nifty Bank, Akshay? 48,000, is that the next big hurdle?
Yeah, so Bank Nifty today is the weekly expiry, and if you look at the positioning today, a lot of put writers have piled up their writing bets yesterday at the strikes of 47,000. That looks very comfortable for today's expiry. And even in the morning trades, what I saw in the first 15-20 minutes was at 47,500 was noting aggressive writing of puts in the first half an hour of trade. So the momentum is strong. The Nifty Bank is better placed over the Nifty index. A break of 47,500 just puts the Bank Nifty on a firm footing, and the all-time high levels of 48,500 plus is the positional targets you can look forward to. Today for the weekly expiry, 48,000 is a resistance. Bank Nifty is cruising as I see right now, and the chances are that 48,000 would be challenged. The call writing positions would be challenged during the day. So if you consider a buy trade, it has to be Bank Nifty over the Nifty index as far as day trading goes.
Good morning, Akshay. I'll drive your attention to Bharat Heavy Electricals Limited. Now, their stock crossed an 8-year high, rising almost 12% in the last few days. It went up to 271 levels. This is probably on the back of BHEL being the only bidder for NTPC's approved 17,195.3 crore Singrauli Super Thermal Power Project. Now, if I see a peer comparison between BHEL and the other company peers in the sector, BHEL has given 18% returns in the last 1 week, 82% in the last 6 months, and 254%, 0.87% in the last 1 year. Nowhere close, whether it is ABB, Siemens, or CG Power and Industrial Solutions, have anybody come close to those figures. Is it time to cash out on BHEL, or do you see the rally to continue? It's slightly down today, but just marginally.
Yes, so BHEL is down marginally, but if you look at the broader chart setup, it's been a fabulous run for BHL in the past few months. And even a couple of days back on the price charts, we did note a strong breakout, which saw a price surge in the stock. This breakout was at the point of 240. So 240 is a very strong support. There may be some bit of weakness for the short term, considering the fact that it is highly overbought on trading parameters. So a slight cool off is justified. I would be keen on re-entering the stock in case I get it somewhere in the range of 242, 245, because that sets up a good trade on a risk reward perspective. Positionally till 235 holds for BHEL, I do not see any concern. You can continue to hold the stock. For short term, a rebound can see it again heading up for around 275 to 280. And on the positional side, that's with a 1 month holding, 290 plus targets can be seen in BHEL for the March series.
All right, another stock we wanted to pick your brains on, Akshay, is Zomato. I mean, there has been a big block deal. 19 crores shares have changed hands, which is equivalent to 2.2% equity in a block deal. This morning, it's worth about 3,112 crore, and the stock has crashed. It's down by about 4% and falling. But, it has been an immense, phenomenal wealth creator for investors in the last 12-15 months. On 1 year basis, it's up around 200%, so has tripled investors' wealth. And in just 2024 alone, the first couple of months, up about 27%. What are the price chart levels that you'll be tracking on Zomato?
Zomato has had a phenomenal bull run, and if you look at the prices where there is a slight hint of profit booking, it is almost seen from the all-time high level. So these levels were visited somewhere way back in November 2021. That's the high of around 170 odd levels, and those are the levels which are vulnerable to profit booking because they are all-time high levels. The charts are highly overbought, and after such a fabulous one-way rally, there is ought to be some bit of correction or profit booking at the given levels. So short term, yes, there will be some profit booking in the stock. There will be a cap on the upsides. 140 on the downside can be tested. So I would say if you have a trading bet in Zomato, even from a 1 month perspective, it's prudent that you book out your profits at the current juncture. A dip around 135 to 140 would make it more suitable from a risk reward payoff. So I would recommend to book out profits from Zomato for the time being as the current chart reading setup goes.
Okay, Akshay, time to cash out from on Zomato at the moment. But what are your picks for our investors today?
So I have a couple of trading bets. These are short term, and the first trade is in ONGC. The ONGC, if you look at the way the government company stocks have started off the March series, the momentum pickup has been very fabulous. It's again regained momentum after it had lost in the last 10-15 sessions. So out in this government stocks, ONGC is one stock which has an excellent technical as well as a derivative setup, and I would target around 297 to 302 from the short term perspective for the March series. The stop loss will be 277 on this trade. And the second trade is in Apollo Tires. The auto space has been firing all guns, and I believe the auto ancillaries here too should be the next stocks to keep a watch on the buy side. So Apollo Tires fits into the parameters on technicals and both derivatives for a buy trade. Target 554 with a stop loss of 532. That's the buy trade I would recommend in Apollo Tires.
All right, that's Akshay Bhagwat for you. ONGC and Apollo Tires are on his radar for the short term. So thank you for joining us here on News9. Always a pleasure speaking with you. But with that, let's slip into a short break. On the other side, market veteran of 40 years, Andrew Holland of Avendus Capital joins us.
For the very first time in our investigation, we unmasked the killer of Ravindra Matre.
In 5G, we have to stand with the world, and in 6G, we have to lead the world.
Winning a Grammy was an absolutely surreal experience. Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, the US markets has slowed down because of high inflation.
So obviously, diamonds being a dream product, something which doesn't have a utility value or is seen as a luxury. So that obviously goes off your shopping list. That's the first item that will go off your shopping list, especially in recessionary trends.
That lab-grown diamonds are not mined, and they do away with the entire mining. So they save up on all the environmental damage that is associated with mining, and of course, the mining cost, which is why they're even more affordable.
People that is impacted by all these recessions are the artisans, are the people who work in this industry, right? But I think lab-grown diamond has allowed them to actually use their skills in the same product.
This and more streaming on world's first news OTT, News9 Plus. Download now.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
Welcome back. You're watching First Stick here on News 9, and the markets now they have turned a corner once again. Nifty, as we speak, has seen a reversal from around 22,350 mark. Currently, we are just hovering above the 22,300 mark. The first support for the index would probably come around yesterday's low, which was around the 22,270 mark. That would be key for the index to defend on a closing basis, and that would perhaps keep the strategy to buy on dips, which has been the case for the last many sessions. The mid cap and the small cap space, they continue to crack. The small cap index particularly, it's at its lowest levels in a month. It has moved towards that February 13th low currently, and it is falling. It is down about 2% this morning. The mid cap index is also seeing some of that rub-off effect. It's down about 1.3%, and it's below 48,500. Volatility, we saw a sharp decline in volatility yesterday, but we are seeing some bit of a pickup in that. India VIX is up 1.32% as of 10 a.m. this morning. It's sitting at 14.57 level. But with that, let's also welcome a very special guest, Mr. Andrew Holland, CEO at Avendus Capital. The last time we were chatting, Andrew, just a couple of weeks back on the sidelines of What India Thinks Today Summit. By the way, on a side note, if you have not watched that interview, do check it out, because Mr. Holland over here spoke about what makes him bet on India, our position among global equities, the trends and sectors to watch out for in 2023. It is available on YouTube, so do watch it. But in the same interview, sir, you also predicted that the Indian bonds will be included in the Bloomberg Emerging Market Bond Indices, and that finally has happened. FTSE now remains the last bastion for India to conquer. When do you foresee them coming on board?
It's always difficult to get the timing on this correctly, but before I just comment on that, thank you again for the opportunity, and it was great seeing you at your summit, which was a fantastic event. I think the FTSE will follow suit. With the other bond indices, JP Morgan being there now, Bloomberg. So it's just a matter of time before the FTSE includes it in the bonds. The good news about this, obviously, is that we'll see some strong inflows, and that would lower yields. So the question still begs: can the RBI go ahead of the Fed in reducing interest rates, which would ease some of the problems for the banking system going ahead as well? So that's I think the next focus of attention for me is what the RBI will do.
All right, and certainly it's a big positive. It's a big positive for the rupee. Of course, as you pointed out, it will bring down the cost of credit. But do you think that this inclusion and JP Morgan is also the inclusion is also going to happen starting June of this year? Will that open our finances to greater scrutiny, and therefore, the general elections becomes, I think, more important in the larger scheme of things, because the Modi government, they have been focusing on fiscal consolidation, and our fiscal deficit overall, sir, in fact, it's on the higher side compared to, most of the other index constituents.
Well, it's not high compared to some of the other deficits I see around the world, to be fair. Particularly the US and Japan and the UK. So I don't think that's what investors will look at. I think they'll look at first of all, yes, you're right, stability of the government, and we'll have to wait and see. But that's what the market's banking on at the moment. And secondly, I think they'll look for the growth of the economy. Where is India in the kind of longer term? What's the outlook for interest rates in India and inflation? And all of those are kind of more positive. So, I don't think, I think what we'll see is probably, some little bit of front running in terms of buying the bonds ahead of it being included in the index, and then a steadily kind of increase in bond weightage, which you have to have, right? You have to have it. So it's whether you're overweight so let's just say your weightage is 2%. It's whether you're overweight more than 2% or you're underweight, and that depends on your outlook for the currency and interest rates and the economy.
Good morning, Mr. Holland. Drive your attention towards China, which has embarked on an ambitious target of 5% growth over the next 1 year, and they have made big announcements, a plan for an ultra-long special central government bonds, a pump prime sort of a boost to grapple with deflation, which their economy is grappling with, reeling under for some time. Getting consumers to spend on commodities. Now, how do you see this playing out, and do you see the commodities market going up because of this impetus? Metals especially, whether it is China, and do you see this rubbing off globally on the metals markets everywhere else because of this pump priming?
Yeah, I think that the market's still at odds with what the Chinese government's doing. Whilst they've said the 5% growth, GDP growth going ahead, I still think we're all awaiting for that kind of big bazooka to be fired. Towards particularly kind of stabilizing the property market and in fact getting investors' confidence back there, not just investors but consumers as well. Because once that happens, then I think you'll see a big uplift in the kind of outlook for China, and that would push metal prices, which you mentioned, a lot higher than where we are today. So I think that the market's kind of not convinced of the 5% without some kind of boost to the policies or boost to the economy. And if that comes, which I think is likely, then I think you'll see that metal prices rising very quickly. But some of the good news is that deflation in China means that you're exporting deflation as well, so that keeps margins better for a lot of companies globally, but also inflation a lot lower. So on one side it's good that they got deflation, but they need to boost the economy to get it moving ahead. But that would be, I think, as soon as you see that, you'll see metal prices rise very quickly.
Going by the sentiments, at least the Hang Seng has reacted positively to the news today. But there is another sector in India which looks to be very good for foreign investors right now. Saab, the Swedish manufacturer, has announced that it is opening its first 100% Indian manufacturing facility in the defense sector in Haryana. Now, do you see this trend continuing? The defense sector in India has seen an uphill growth over the last few years, and the government is doing everything to boost it, HAL being an example. So do you see more foreign players coming into India, setting up 100% manufacturing facilities to qualify even for the Make in India procurements of the defense forces? Do you see this trend to go on, and do you see them getting listed also in the Indian stock markets?
Yeah, no, it's a great point, and one of the points I made in the summit was that if you look at the companies, the global companies that have come into India and have a listing, they've done spectacularly well. Hyundai said they might, which have been here for years, right? They might kind of list on the market. Now, if they did, and the valuations I've seen are around 30 billion, that's kind of 40 to 50% of their own market cap in Korea. BAT Industries said they're going to raise some money or monetize their stake, and the share price in the UK went up 11% on the day. So, it's not just that you're benefiting from the growth of the Indian economy, but if you do a listing, then you're getting valuations which are sometimes as good, if not more, than you have in your own home country. Maruti being a great example. The market cap here of what they own is bigger than their own market cap in Japan. So I think that's the kind of benefit you can get, not just from the kind of sales and profitability that you're going to derive from Indian kind of revenues, but also if you list, then you're going to get a valuation kind of impacts as well, a positive impact, which will help your own share price in your own country.
All right, and the fact that some of these companies could get premium valuation speaks on the inherent strength of our markets. And I mean, 2024 we have had a great start to the year. In the first couple of months, we have seen about a 3 to 4% dip along the way, but the recovery that has been almost immediate now. We are currently about 3% away from that 23,000 milestone, Andrew. How soon do we get there? End of the financial year, do you reckon?
Yeah, we might have a kind of a run up in the next one to 2 months, ahead of the elections, but I think that's about it. And I think then we'll await to see what the new government has in store going forward. I think there's obviously there will be another budget to come in July, and I think all eyes will be on that, particularly on the tax side, to see if there's any changes, particularly for the markets, which has been rumoured for some time, and I do expect something to happen on that going forward. So I think the market will probably feel the upward trends ahead of the elections, but thereafter it really depends on government policies and taxation, which I think will drive the market in the shorter term.
All right, and before we let you go, sir, the broader markets, now the cracks are starting to appear over there, especially the small cap index. It's at its lowest level since in a month. In fact, it's at a February low, down about 2% this morning. What's your take on the broader markets and small caps specifically? Just some good old profit booking taking place, or you think that the valuations are so high that the market is finally taking cognizance of it?
Listen, it's been a great run, right? And you're bound to have some correction. I mean, it can't be a straight line up all the time. I would say that, whichever, if you're dealing in mutual funds or you've got individual stocks, if you still believe in those companies and you feel that the kind of runways there for many, many years, say in the electronic manufacturing sector or the hotel industry, where you can see that there's big growth potential, then these are corrections which, are bound to happen, but would be a good time to kind of add to your holdings going forward. So you're going to have mid caps outperforming, then small caps, and then large caps. It's a rotation that you'll find in many markets around the world. If you look at the US, it's a magnificent seven, right? It's not as though small caps have really performed that massively well, but there'll be a broadening out of that as the economy recovers going ahead and as interest rates come down. So I think if you believe that interest rates in India are going to come down, that's going to benefit those small and mid-cap companies as well.
That's Mr. Andrew Holland for you, sir. Thank you for your time. Thank you for your thoughts.
My pleasure.
Always a pleasure speaking with you.
Thank you.
But before we wrap things up, let's also look at how the markets are doing, because we have seen a bit of a reversal from 22,350 levels. We are currently hovering around the 22,300 mark, and the correction in the broader markets, that is getting deeper. The small cap index is down about 2%. The mid cap index is also down about 1.6%. Both are very close to their day's low. Volatility is also picking up this morning. We are above 14.5 levels on India VIX, but Nifty Bank, that is outperforming, and that's up almost 1% this morning. In fact, we had reclaimed 48,000 for a very brief moment. We are just trading below it. So I think that index would be a key for us to track in today's trading session. But with that, it's a wrap on this edition of First Take. Keep watching News 9.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me.